Dave Wolcott, thank you so much for coming on the Edison podcast. I appreciate you being here today.
Hey, Ed, grateful to be here, and thank you for your service, brother.
Saying thank you for your service. And that's how we met the first time. You were on my Helping the Brave podcast. And I thought on my Edison podcast, it's all about your greatest accomplishments come from your greatest defeats, where the Helping the Brave is all about your transition, what you're doing and how you got to where you are, and can you help veterans and all those different things. And I appreciate you being on that one.
Absolutely.
Yeah. And then so I wanted to bring you back here to have, people understand other stuff. And let's just go back a little bit. I know you were it's so funny how, so I didn't have to research you. I just dropped your name and ChatGPT went and found you, but it said, you must have this somewhere. It says former Marine captain. Well, you were a former captain. You were never a former Marine. All Marines are always a Marine.
Correct. Correct.
So you need to go get that corrected there.
Yeah.
Yeah. Because I mean, that if you don't understand, that's not the same for the Navy, even though Marines are a part of the Navy. It's not the same for the Air Force, and it's not the same for Army. But Marines they're never not a Marine. They're always a Marine.
Lifelong. Yeah.
Yeah. And so you did that service, and then I just want to brief because people are going to need to know, how did you transition from the military into what you're doing now? Because there's a movie out right now called Roof Man. Have you heard of it?
I haven't.
It's basically about a guy who was in the military. He gets out. He doesn't know how to turn what he learned in the military into to his path forward. And so he cuts through the holes of, and I don't want to ruin the movie for you, but if you listen to it, cover your ears, cut a hole in the roof, and he goes down in all these different businesses and he steals money that way. But what I was getting at is the fact that the military taught him so much about knowing, like he can go into some place and then someone, how many houses are there? 28 houses. How many, they could ask him, how many has heat pumps? How many has this? He's so observant because of what he learned in the military and how smart he is, but he could not relate that into the real world of how to use it. And I think that's one of the things that we run into. So how did you get into this part?
Yeah, so maybe I'll just kind of go back to my origin story, and really it ties into my Edison moment, right? That I think has really been that transformational trigger for me to really kind of build the business that I'm in today. So, I mean, look, I was raised in a middle class family in Connecticut, and we didn't come from a lot of money. We didn't, money back then was kind of taboo to talk about. My dad just kind of worked hard, and really, the recipe for success was go to school, get good grades, and you're going to get a job and life would just kind of work out, right? So I kind of subscribed to that theory, had the opportunity to serve my country in the Marine Corps. After I transitioned from the Marines, I got into corporate America. And, as I mean, I lost that sense of purpose and mission, which, I was deeply driven by in the Marine Corps, and just that call to honor was great. And at the same time, my wife and I were raising a family. We had an 18-month-old. I'm in my mid-20s. And then on October 24th, 2000, we literally had triplets. So we quadrupled the size of our family. And then at the same time, so this is 2000, Ed, and I had everything, all of my investments, everything I had saved up, basically in tech, because I was in the tech industry. So I got like slaughtered in the tech bubble at the time.
And when you say, it's the tech bubble, was that the .com?
.com, yes.
Yeah. So, I mean, so people need to understand the difference. What's happening right now with AI is kind of what happened with the .com, but everybody under the sun was doing so much. So we're going to still have an issue with AI that coming forward. I think that there's so many companies doing stuff, and there'll be so many companies left over, but I think there could be an issue going forward with AI. So just be careful of that. That's just my take on it. Because the .com, everybody thought it was going to go on forever.
Totally agree. So here I am, they're saying it's $1 million per child to raise a kid, right? Maybe I will retire at some point. And, I was just really trying to, build wealth. And then I lost like over 50% of everything, overnight. And I just got so tired of the stock market. And I talked to my financial advisor, and all he could say was just max out your 401k, put your money in 529 plans for your kids. And that was just the advice at the time. But now looking back, this actually launched me on this obsessive quest to really figure out how centimillionaires and billionaires are really building wealth. Because I knew at that time that building wealth as a retail investor in the stock market was just not going to work. So I then started investing in everything from single family real estate to multifamily to retail to office buildings to raw land to oil and gas, all kinds of different private investments. Fast forward 20 years later, I built an amazing portfolio. And then I wrote my book called The Holistic Wealth Strategy to really create a blueprint for people and figure out what is the game that we're playing here? What is the roadmap so that I can, build as much wealth as possible and really live the best life that I'm meant to live.
And all right, so everything worked out for you in the real estate market and there's been no issues at all.
There's challenges every day in every asset class, of course.
Yep.
And, the lessons are, the resilience, Ed. And I've lost money we had Kodak stock, a blue chip stock, right? That was probably as safe as you could get. Goes to zero overnight, no recourse, no nothing. Right. In real estate, we've had challenges since the Fed has increased rates like at an unprecedented rate. And there's been challenges with distributions, things like that. So projects that are going well have been kind of paused. But
Dave, before you keep going, I know I'm sorry, but I want to have a conversation back to what you said about the Fed. Mortgage rates went way up before the Fed did anything because people don't understand those two things. Fed funds rate and mortgages are two separate entities. They sometimes run on the same street, but in different directions. The Fed does try to catch up to the bond market when it goes up because of the fact of it's trying to slow down the money supply. So you're right about one thing. The Fed did raise a lot of late rates to mess up the short-term money supply, but the long-term, which affects mortgages, was already on the way up because of the inflation. That was what it was all about. And people understand that. I've been in this industry for 27 years. I do understand and I was watching as soon as the Biden cut that pipeline and said, we're not doing that. I was like, okay, that's it. We got inflation. And I knew it was coming, but nobody else knew that it was really going to come. And everybody said it was going to be fine.
Well, from my experience, basically 90% of the commercial real estate industry, whether it's multifamily, office,
that's off at the Fed. Yes,
they were all using floating rate debt in 21, 22.
The 2 year, the 5 year, those kind of things.
Yeah.
There is not a commercial product that I know of that is not an adjustable. It's all adjustables.
Yeah. So really the lesson learned there, is that as an investor, there's just so much more to investing than tactics. And, I think, what our mission is to really help people really rethink what wealth even means to you, right? And we talk about this concept really of holistic wealth, which is really encompassed with 6 forms of capital, not just financial capital, but also intellectual capital, spiritual capital, emotional capital, human capital, all these other things to be truly wealthy. Because when we build financial capital, what do? We spend the money on different things. You want to spend it maybe on your health or you're buying back time, right? All these other things. But, truly evolved people understand that these other dimensions are very important and therefore arrange their lives in such a way that they can become wealthier, right? Because I think we have this misperception of what wealth really looks like in this world from social media and all these things, whether it's the Lambo lifestyle or, all these different toys. But a lot of these people have no health, right? Or they, other things are very shallow in life.
Yeah, or they don't have the relationships that they want. I mean, they have the money, but they lost everything else. They get the money, they did everything they possibly can. Now they have their money, and then they have nobody around them, and they don't have it. They're just stop worrying about what they see on social media. There was a post the other day where this guy actually posted how the people really looked versus the picture of them that they had totally cleaned up and polished and everything else. It was a night and day difference of how they look, but that was their difference of their regular picture versus their Instagram picture.
Yeah.
Yeah, and that's the thing is 90% of what you see online is done by 10% of the people, and you don't want to follow them. It's not true most of the time.
It's interesting, Ed. I ask clients a lot of times, if I gave you $1 billion today, uh, what would you be doing? Where would you be? And who would you be with? And it's really interesting because a lot of people couldn't spend the money, nor have they actually gone through the thought process to figure out, okay, how can I live a bigger life, right? Maybe my relationships, even my immediate relationships, are suffering, and that just takes time and attention. It doesn't even take money, right? So when you can start to readjust, your vision and what you're expecting out of certain things, it's interesting because a lot of things don't even take actually money to accomplish that. It just takes focus and clarity.
Which I think a lot of people don't know. A lot of people were brought up; they have no idea what a relationship is. They weren't. So there's that issue right there, because that's one of the things you're talking about. Emotional, all those things is very important. Money is important, but it's not everything.
Well, here's where it's evidenced, right? In ultra wealthy families, right? By the time you get to Gen 2, really 80% of all wealth is actually lost. And then it's even higher than that by the time you get to Gen 3. And why is that? It's really because values haven't been passed on. It's because of some of these, intangible, deeper type qualities, right? Versus just the capital itself.
Because what do they say? First generation builds it, second generation just, and then the last generation spends it all. Or there's a whole statement there, and it's so true because I see it in the town I'm in. The people have generational wealth, and the difference in between when the parents made it, the kids got it, and how they're going through it and how they're doing differently. But then there's other people who are good stewards of it. They learned from their family. They weren't given money; they had to go earn their money. So when they get the money from the family, they understand that.
Yeah, absolutely. And this is also evidenced, and look at either, superstars like sports, athletes, or look at lottery winners, right? Oftentimes they end up in a worse situation after winning the lottery because they have no education, they have no values around it. So money is really just an amplifier of energy, and that could, positively amplify you or negatively amplify you.
And that's the thing is what people understand is like the lottery winners, they get this money and then everybody comes out of the woodwork, wants money, they give it. I mean, they win a lot of them win a few $1,000,000, but they think it's a lot of money. It's not a lot of money after taxes and everything else. And but they spend it like they have so much and it's gone in no time, just like you said. And it's important to understand money. And that's what a lot of people do not understand.
Right. Right. And that's one of our missions, to help people think about things differently. And, here's another example, right? It's like the financial services industry wants you to think that it's a good thing to defer your taxes and put everything in, government sponsored qualified plans, right? Like 401ks and IRAs. But if you actually just sit down by yourself and run out the math on a spreadsheet, or you could throw it into ChatGPT, but wouldn't you rather pay taxes on the seed rather than the harvest, right? Because the only thing I'm certain of in the future is taxes are going up.
Yep.
Right. So why would I defer my taxes, which is basically what the government keeps doing, right? Kicking the can down the road, and why, inflation keeps creeping up.
Right. Well, that's just like I talked to a person the other day. They had left New York and they're in someplace, I think, like North Dakota, someplace where there is no taxes on all this stuff. And they were asking about, 1031 exchange from their property in New York to where they are now. I said, well, you might want to research, because a lot of the states like New York and California, their claws are in that money for, forever. So you might want to pay them off now instead of build a nest egg of a few $1,000,000 in a different state. And then they get their claws into that amount of money.
Exactly.
And you really need to research that.
Exactly. But that's not the advice that's given, Ed. The advice.
I know people, they think about themselves. They don't think about the clients.
Right.
Yeah. I'm sorry, I didn't mean to cut you off, but you're right. It's so true. And they were like, well, I'm like, just talk to an attorney, talk to an accountant before you do anything. Find out if that, because that's the first thing I thought of. Because if people ask me all the time, why don't you leave California? Well, one, there's no weather like California. I'm sorry. If I go to your state, I have to deal with humidity, and I hate humidity.
Yeah.
I can't stand it.
Yeah.
I lived in Texas for 3 months, and that was enough for me. And that was only because when I was in the Navy, I'm like never coming back here. I mean, I have to be in a dry state, and I prefer California because it's dry, but it's also got a little humidity, but not like, walk outside, you can't breathe after it rains humidity.
Right.
So,
right.
So what do you, when people, what do you think most people don't understand about your whole holistic wealth strategy? What's the one thing they always get wrong?
Well, I think the biggest missing link is that people just don't have a strategy with overall wealth, right? Okay, so if you these family offices that are worth 100 million or more, right? The first thing that they do is create an investment policy statement, and we actually run a virtual family office, so that's one of the things we do with our clients. But it's so critical to have a strategy, right? And what this strategy encompasses is, yes, not only are we going to pick a portfolio allocation mix that makes sense for you, but it's also things like understanding your investor DNA. What's your risk profile look like, right? What investments are suited to you? If you're a people person, right, real estate is so much better than, getting into crypto day trading, right, for instance, right? And there's things like that. And also doing like purpose-based alignment, right? So you actually understand, are we looking for income? Are we looking for tax offsets, growth, right? All of these things. But if you don't have a target, you're going to miss every time, Ed. So getting a very crystal clear strategy overall, solidifying your goals, solidifying your vision statement, and then back in the investments into that. But most people they're kind of chasing shiny objects. They say, I want to go invest in this. Because that's a great idea, or maybe I need to get into Bitcoin now, or, tomorrow it's Ether, or, whatever's going hot at the time. But if you have a strategy, you can be more disciplined, because really investing is a process. And when you can stay disciplined in that process over time, that's how you win.
Right. Because I mean, if you have a strategy, then you don't go down these paths and then go the wrong way and waste money. You get into crypto at the wrong time, and next thing you know, you lost everything. Right before what was it, 3 years ago? I mean, crypto dropped drastically down during that period of time. And, after it went up, when inflation, as soon as inflation, once people knew about inflation, everything dropped.
Absolutely. Yeah.
But back to your statement about the 401ks, IRAs, those kind of things. The problem is most people don't have any other choice through work. And so that's what they invested in. And they think by delaying the taxes now is the best strategy. But as we see, taxes don't go down, they keep going up.
Yeah. And there's all kinds of, really neat things that you can do. And this is part of that intellectual capital piece, right? There were plenty of times in my career I had no financial capital to go invest in the next deal. But what did I do? I listened to great podcasts like this so I could get smarter, right? And learn about things like, oh, I didn't even know there was a self-directed IRA. So now I could shift that capital into a self-directed IRA. And okay, now I can get some exposure to direct real estate, or maybe precious metals or crypto or whatever you want. But I can reduce my exposure to having 100% of my portfolio in stocks, bonds, mutual funds, and ride that wave.
What about, aren't they changing the 401k where they can invest into other assets?
Yes. Yeah. You can do that through a self-directed IRA right now.
I know, but with the regular 401k, 403b, are they changing those? I heard they were changing those to where you could do that also.
Yeah, I mean, we'll see what happens. Yeah.
Wow, so I heard they were going to sell off Fannie and Freddie, and then that's been put on hold. I'm like, well, when you make $18 to $50 billion off of two companies, why would you get rid of them?
Yeah. The other thing I would say here, Ed, that's just super important, right, about the overall strategy is to really understand that you are your greatest asset. So if you look on the balance sheet, you should literally put down yourself, because anytime I invest $1 into myself, and whether that's through time, reading books, listening to podcasts like this, masterminds, coaching, my health, I always get a 10x to 100x return on that. So even if it was down to your last $100,000, where would you invest that? You should invest that in yourself, right? Because that's the ultimate leverage point. That's the ultimate way to multiply your capital.
Correct. I mean, you always need to invest in yourself. I went to an event called Growth Hacking Live 5 weeks ago. I learned how to Vibe code, VIBE code, and basically what it is you're a coder, but you talk to AI and it does all the coding for you. And was that important to me at the time? I had no idea how important it was going to be to me at the time. I'm doing a ton of stuff. Like I created a podcast app that takes your podcast MP4, edits it, takes it all the way through the process, and will distribute it to all your places for you automatically once you set it all up. So, I mean, those things that I've wanted to get done that never could be done before can be done now. How are you using AI in your stuff, or are you using any AI in your stuff?
We're using AI extensively. So one thing, let's talk about investing that could be helpful for people, due diligence, right? Phenomenal way to do due diligence, like examining PPMs, looking at different managers on different deals and really providing some assessments in there. And then our LLM just keeps getting smarter and smarter based on all the different, deals that we're analyzing, the inputs that we're putting into that. So it used to take so much time, right, to pour through all those documents and things. Now we can, do that in a fraction of the time. That's really helpful. And also, how we're organizing our company from an operational perspective. How can we be always more efficient? And I come from tech industry anyway and consulting background. So, process to me is king, right? Everything's about people, process, and technology. Really, automation has always been around. They just called it something different. Now everyone calls everything AI. All it is automation, right? It's enhanced automation, but you have to understand your process before you do that. But in the investing world, actually, here's another use case. So I was on actually one of my podcasts earlier, and the guest was making this really profound insight. He wrote a book that basically how much fees are killing investors, investing in like a 401k. And you might say, hey, it's only, it's 1 point of investable assets. But he's saying, like, look, nobody does the math on this over time. So if you take out that 1% and you keep contributing to this thing over 35 years, it's actually a massive amount of impact. So now you could actually just take your 401k, put it in ChatGPT and say, hey, if I've got a 1% to this, let's assume I contribute 20% of my salary, that scales at 6% a year for the next 30 years. What is the actual impact of the fees? And you could actually, pull that out pretty quickly, which that's a real eye opener. Or some of these tax savings, like we were talking about, some of these tax planning scenarios. If you were to quantify the tax impact, especially over a given period of time, which no one really can kind of think that far ahead, and then you quantify the true impact to that, you might make a different decision, based on that.
What you should do, Dave, is you should build an app that does that.
It's interesting you said that, Ed. We actually are, and it is launching in January. It's called Pantheon Wealth OS, and I have struggled. I'll be curious to see what you think about this, but for 25 years of investing in real estate alternatives and having 20 different spreadsheets to manage performance metrics around your investments, most people are trying to get to financial independence. How do you manage 15 different income streams from different assets, right? Without a ton of manual labor. Well, we're putting all that together in one, so it's almost like MyFitnessPal for wealth, right? And especially for real estate and alternative investors.
Well, I mean, because you could do it an easier one. Because the vibe coding, I don't know if you know about vibe coding, but it's just freaking amazing. I needed a short or URL creator the other day, and I was like, I don't want to pay $29 for it. So I created my own, but then I added on smart QR codes, which means that you print one QR code and you can change the URL forever to it wherever you want it to go. You can also set it up by hours. 3 times a day has something totally different. It's amazing what I came up with. It wasn't my idea. It was my the AI's idea, because it went and searched Reddit and all those different things that people complained about QR codes. So I mean, if I'm going to build it, I might as well make it to where people will use it. So but what I was thinking about with what you just said, where someone takes their 401k information, their little statement, upload it, drop into the app, it'll tell them everything they want to know. And then you could always go, if you need help on this, it's just an easy way for people to keep track of their stuff, because nobody wants to put their stuff in ChatGPT because they're afraid their information is going to get out there, which it will, because unless you tell it not to, it's going to put all that information out there.
Yeah. No, absolutely. Yeah. And getting the AI analytics, once you have all of that data in a secure place, and now you can do AI analytics on it. I mean, man, can you increase the performance, right? Or identify maybe blind spots you didn't even know you had.
What's wrong with what I'm invested in that my company is telling me to invest in? What is wrong? My wife works for Kaiser, so you have to use their
provider. Yeah.
And not only that, but they have mutual funds, right? That's all they can invest in. They can't invest in anything else. And that's like, what are the best ones? How do you know that? Something that would be easy to look at that, and over time how they've done, and is there anyone else in that portfolio that they might want to think about for where they're in their age and all the different things. And this is different than what you just told me, because what you just told me was how to keep track of 15 different assets class. Well, that's not what this person wants. They want to know about the one thing. And that's one thing about Vibe coding, is it's personalization of apps that you could never do before, because just to get the stuff looked at and kind of the Figma, you're talking 10 grand, and to build out a full app, it could be up to, anywhere from 30 to 300 grand, depending on who the coders are and everything else. Now you can do that. URL one cost me $25, and it's amazing. It's called shortfuse.io. And I'm not just patting myself on the back, but I was surprised. And I showed it so many people, they're like, holy cow. And you can track everything about it, by putting codes in it. So, and what's nice is I have a bunch of speakers, and I'm like, you could just have one set up to the actual geocode that when you show up on different stages, this is, they scan it. It's for this event only. Once you leave there, if they scan it again, it won't be for that event, it'll be for your next event.
Yeah, it's awesome. I mean, the AI world is really, if you're not embracing it, I mean, you need to get your head around it. And in so many different ways, in the investing world, in the business world, right? Personally, there's just so many things that it's going to be able to do. And it's just changing at the speed of which is changing is unbelievable.
Huge. Yeah, because some of the stuff I'm doing now, they couldn't do 3 months ago.
So actually that opens up another topic that's, I think interesting, worthwhile looking at for investors, Ed, is that we like to invest in, asset classes that have really strong macroeconomic fundamentals, and also have this trifecta, I like to call it, right? Which is tax efficiency, passive income, and forced appreciation. So we all understand the benefits of real estate investing there. But another asset class that we focus on is actually energy and oil and gas.
I was going to say, right? I was going to bring up it's oil.
So, I mean, if
don't understand that at all.
If there is ever a time to get into this space, it's now, because the AI demand plus population keeps growing. And then what people don't realize is when you invest in oil and gas, you can actually get an active income tax offset. So, this year, the fund that we're doing is up to 90%. So you can, if you write $100,000 check, you're going to get a $90,000 paper loss on your investment, which you could literally bring your taxes down to zero, right? If you wanted to, and you're diversifying from the stock market and basically, hedging against inflation, getting into, really a stronger asset class too.
And I'm going to throw out something I just saw today or yesterday, Alaska. The one company just got a huge grant from the United States to create a company for, mining the certain material that they use in all the computers and all the different things, and also in these missiles. And they got their grant from the Department of War, I guess they call it now. And it's just, like $350 some million to build this, and then build a refinery and the whole 9 yards. So there's such a huge thing like what you're just talking about going into Alaska right now. So there's a huge opportunity for investment. Plus, there's another company that the United States invested into. I forget the name of it, but they also so they gave them a grant, but they invested. They go, okay, we want so many shares of this company. I'm not talking NVIDIA type of saying it was another type of the rare earth mineral company.
Yeah.
So, yeah. And those type of companies right now will grow because when the government's involved with it, they want to make sure it's going to grow. So they'll make sure.
Yeah, for sure. Yeah, it's so smart to be investing where the puck is going, right? And start to look at a macro level, these trends of like, hey, if I'm going to place capital, is it going to be safe in 10 or 20 years? Not just trying to time the market with like crypto, right?
Right. Oh yeah, that was the worst thing that most, unless you bought in 2000, you're crazy. Yeah, when you bought it so cheap back then. All right, how are you doing? So you're investing. So you're talking about real estate. Have you invested in companies yet, like HVAC, plumbing, all those companies that owners are going? They're in their late 50s, early 60s. They want to retire, and none of their family wants the business, and they're trying to get rid of it. The reason I'm bringing this up because I'm part of this whole different group, and they're really huge into buying that kind of stuff.
So yeah, we are, and I'll tell you how we're doing it, which is interesting. And again, this is actually kind of a favorite for billionaires, and this emerging asset class called private credit, right? Where, and we are working with a private credit sponsor that essentially is investing in small businesses that are growing, like HVAC companies, right? You name it, but it's across 15 different industries. And what's happening is the banks keep tightening regulations, so they're not able to give capital to growing companies. These types of firms, the owner may not be able to actually get capital from a bank, or it takes 6 months to get it. So we can underwrite them inside of a week. And now they're paying a premium for that capital, but now they're able to capture a new revenue stream. And investors, I mean, we've been running this over 3 years now. We're seeing returns over 20%. And that's compounding. So it's, the returns are significant. And so is the velocity of money, because the average life cycle of a loan is only 7 months, and we're getting paid daily principal and interest, and weekly. So as soon as money comes back, we can actually reinvest that into another deal too. So it's very diversified, and the speed of money is just, it's amazing in that model.
So you're kind of like an on deck, but more of a private.
Yeah.
Yeah. That's because that's the only commercials I know.
Yeah, but we're doing direct, and what's interesting is,
on deck's expensive. It's like 30%.
Yeah, but as an investor, right, working direct with a sponsor, the returns are very healthy.
Good. All right. So what did I not ask you today that I should have asked you, Dave?
Yeah, I mean, I think we talked about investing in yourself, I think is really important takeaway. And maybe, one thing we could leave listeners with, Ed, is, I always love to make these things really actionable and everything, right? So we've got about 45 days left in the year. So what is one thing you could do in the next 45 days that would get you closer to creating freedom in your life and making 2025 the biggest year you've ever had?
You're talking just the rest of the year?
Yeah.
But the problem is, by the time people listen to this, it's going to be 2026. So
okay. Well, you could,
something just so you know, because we're about
So in terms of recording
in November.
All right. So let's reframe it. So in the next 90 days, right? What's one thing you could do to make 2026 your best year ever?
All right. And so if that question was asked to you in 2026, what would your answer be?
It was actually creating my 3-year vision. So I just updated my 3-year vision, and I can't tell you how powerful that was, Ed. Working on everything from, what my relationships look like, how my business is performing, what my investment portfolio looks like. And I literally have a 12-page document with visuals and graphics and expressly detailed content. And after doing that exercise, like we literally had the best quarter out of 5 years ever, like inside of 30 days. And things just materialize, right? It was the universe, kind of coming back. But when you have so much clarity on where you're going, it's amazing how much faster you can move.
Yeah. I mean, it's about planning. You have to plan, and most people don't plan. Back to the universe thing, you're talking like The Secret. I haven't seen The Secret in so long. Remember the movie?
Oh, yeah. Yeah.
Yeah. But basically what I boil down to is what you put out there, you get back. So if you're putting out positive energy in what you're trying to do, and you focus on what you're trying to do, you will succeed because you're focusing on it. If you don't, you're not going to succeed. I've seen that drastically with a lot of stuff I do. I create things early and then plan for it, and then it all comes together. Not today, but in maybe a couple weeks or a month, or sometimes it takes a year, depending on how far it is. And that's a ton of stuff I have going. So,
yeah, it's really counterintuitive that when you actually stop chasing money and start focusing on your vision and your values and creating impact, you'll find that the universe responds and money will just flow to you.
Right. And there are going to be times where money might be flowing away from you for a short period of time because something you didn't do, but that's okay. Keep on your plan and keep going, make changes when you need to, but keep focused on your plan and it will come back.
Yeah.
Dave, it's nice having you on the show again. I should say on this show. Nice to see you again. Again, thank you for coming on the show today. I really appreciate it.
Always a pleasure, Ed. Really appreciate you.
And I'll have your information for your book in the show notes. But your holistic wealth strategy is on Amazon, I assume?
Yes, holisticwealthstrategy.com. And actually, listeners can get a free copy of it there if they want to check it out too.
Oh, there you go. I'll put that in the show notes also. Again, Dave, thank you so much for being here today.
Thank you.